Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, today we are revising the most anticipated chapter. Many people skip this chapter thinking it is very hard. But be rest assured, we are here to make this chapter super simple, super easy, super mind blowing, super amazing for you. Okay, we will try to give you a brief knack about the chapter, how to read the chapter in the most easiest way, so your life at home is sorted. It's a bigger chapter, but be rest assured, we will try our best that in your brain we can put how to read this chapter, how to understand this chapter. Of course, it cannot be learned. It's a very big chapter, but once you understand the right approach of this chapter, then it's very easy to crack this chapter. Okay, during this one lecture only we will finish entire chapter. Rest assured, wonderful video this is. Okay, let's start right away. Chapter number 5, audit of item of financial statement. Basically, remember how many items of financial statement are there. Four things are there in financial statement: balance sheet, P&L. Inside balance sheet, two: asset, liability. Inside P&L, income, expense. One more time: P&L, income, expense, balance sheet, asset, liability. Okay, so these four heads are there. How to audit this four head? Below them there are a lot of items. Let me take example. In income we have other income like interest income. Then we have sales, so there will be procedure of sale, other income. In expense there is purchases, legal expense, printing, stationery. Okay. In asset, tangible, intangible, inventory is there, trade receivable are there. Okay, now come to liability. Share capital is there, borrowings is there. How to audit each item we are going to learn, but we have designed a super amazing, mind-blowing, easy time pass technique, so anything is asked, it's very easy to crack. So that is why we are here. If you are new to this video, okay, do consider liking this video because we have put in a lot of hard work. If you feel, and do share with others also. If you are new to channel, subscribing the channel is a must. Okay, without that it is not allowed. Okay, so we keep on bringing such amazing content to you. Okay, now let us start. What we will check, always remember, first of all there are two approaches. Number one, test of control, test of detail. Anything you audit, let's take an example of sales. Okay, I will audit sales. Never ever sales audit is done first. First of all, in sales, what I will check, always remember, in sales what is the first thing I will check? Sir, in sales, first thing is always check the process. What is the process of the sales? Okay, understand the risk of material misstatement in sale. Okay, then if you feel understanding the process, after understanding this, if you feel process is good, then only you do test of control. If process is bad, no need to do TOC. What is the use of testing those controls which are bad? So first understand the process. In that process, see process of sales is strong or not. Okay, understand the process, risk in the process, related control to mitigate risk. Okay, now you have to understand whether process is good or process is bad. Sir, if the process is awesome, amazing, mind-blowing, then go ahead and test control. Sir, if process is good, why do I test control? In test control, I will take samples of entire year. Okay, 25 samples I take in TOC, in Big Four, test of control. After that, if you feel controls are good, then substantive will be less. Okay, but if you feel, okay, process is good but controls are weak, process is good but when you did test of control it is weak, then substantive will be done more. All that we have discussed in chapter number 3, chapter number 4. Then what is this all about? This is chapter number 5, what to check inside substantive. Many people will say, understood, substantive we will do, but what do I check in substantive? Can you tell me that? What will I check in substantive? Okay, I know all this compliance and substantive. Okay, one more time, first understand the process. If process is good, do test of control. In test of control, if you find controls are awesome, then substantive will be less. But if you feel controls are third class, then substantive will be more. But in substantive, what I will check? In every item of financial statement, what will I check? Okay, very simple, four things: asset, liability, income, expense. One more time, asset, liability, income, expense. Sir, but in asset, liability, income, expense, what to check? Assertion. This entire chapter is about assertions. Okay, so assertion we will check. This definition we have already done in another chapter, but let's do it again. Assertions are representation by management. See, what is the meaning to assert? Assert means to state, to mention, to specify, to tell, whatever English you know. Assertions are representation by management, explicit or otherwise. Now you will ask me, what is explicit? Clearly explained. Assertions are representation by management, explicit, clearly explained, or otherwise means many assertions are implied. Okay. See, sometimes your mom will directly tell, I love you so much, but your dad will not hug you like that. Okay. But doesn't mean your dad doesn't love you. Okay. Dad's love is implicit, it's implied. It's visible in the actions. He wants you to study. He wants you to pass. In English, that is also love. Assertions are representation by management. Management is telling that we have followed this. Okay. Assertions are representation by management. Explicit or otherwise means implicit, implied, that are embodied in the financial statement. What is embodied? Included in the financial statement and checked by auditor to detect different misstatement that may occur. Absolutely not understood. One more time. Assertions are representation by management. Management is clearly asserting, management is specifying, management is telling, okay, we have followed this representation. Okay, example, if sales is written 700 crore, it clearly tells that sale has occurred, that sale is complete. Are you clear? That's occurrence, completeness assertion. But it also tells you the amount is correct, measurement. Some things are explicit, explained, some are implied. What is implied? Presentation and disclosure is proper. It is disclosed as per schedule 3. Simple. I hope you understand. Yes. So assertions are representation. Management is clearly telling, explicit or otherwise, that are included in the financial statement. Embodied means included and checked by auditor to detect different misstatement that can occur. Very simple. One last time. Assertions are representation by management. Management is telling, explicit or otherwise. What is explicit? Clearly explained. Otherwise is implied, that are included in the financial statement. Embodied means included. And auditor will check or checked by auditor to detect different misstatement. In simple words, plant and machinery 600 crore. It's clearly valued. It's complete. Its presentation and disclosure is proper. Management is stating, asserting, mentioning. Auditor has to check whether it is proper or not. Very simple. Last line. Okay, in asset, liability, income, expense, what to do? Assertion checking. Assertions are representation by management, explicit or otherwise, that are included in the financial statement and checked by auditor to detect different misstatement that may occur. Read nicely. Small break, 5 seconds. Over. Last time, assertions are representation by management, explicit or otherwise, that are included in the financial statement and checked by auditor to detect different misstatement that may occur. Simple. Yes, sir. Now come ahead. Now, there are certain income statement assertion means P&L, certain balance sheet. We have to check how many things today? 4. Asset, liability, income, expense. First, we will check all item of income expense. Income and expense comes where? In income statement, P&L. So, any item of income statement, be it purchase, be it sale, be it other income, be it printing stationery, we will check this many assertion. Technique is awesome presentation. Anything in PNL, awesome presentation, awesome presentation. But awesome spelling is so weird. Why? Because in the technique, this is fitting. I know actual spelling is AWESOME, okay? But in technique, this is fitting, okay? So awesome. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement. One more time. Occurrence, completeness, cut off, measurement. One last time. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement, presentation and disclosure. Very simple. We have to study all this in detail, but let me take sales example. Okay, you have to tell me. Okay, you are champion. Tell me, when do I know that sale has actually occurred? How to know sale has actually occurred or not occurred? You tell. Sale has occurred. Dispatch document I will check. Yes. If it is dispatched means it has occurred. If there is a lorry receipt, if there is a gatekeeper receipt means occurred. In every item of P&L I have to check whether it has occurred or not. It should not be fake sale. It should not be fake purchase. Clear? With invoice you cannot check assertion. Difficult. Invoice I can prepare dummy also. Okay. Occurrence. Second, completeness. Okay. Is the sale complete? Usually remember there are two things in completeness: overstatement, understatement. Sales are less, sales are more. Never we show more sale. Why? Sorry, always we try to show more. Why? So profit is also more, share price will be more. But never I will do understatement. I can do in some case when there is subsidy. For example, my sale have become 10.5 crore. If it is below 10, I will get 10% subsidy. Then I can do wrong. Okay, in many business it is there. If sales is in this, below this limit, you will get subsidy. So in those case, I will do. Completeness of sale is there. Cut off. Cut off means what? The transaction of sales have not gone to April. Many time, okay, April sales I will take in March. Why? Pressure is there. I need this much funding, so this much sales should be there. To maintain this share price, my sales should increase by this much. So I should show dummy sales, or I will show April sales in the month of which month? Okay, in the month of March. Then how to catch all this? If there is too much sale return in April, realize there are fake sales. Okay, many ways to reconcile. We will see that. Cut off means transaction should be recorded in correct period. Purchase, what we will do? Try to show March purchase in April. Why? So profit is more. We tend to do such things in India. Okay, lot of people do lot of things in listed company which are wrong. Then how does auditor certify? It happens. It's India, yeah. So it's okay. We cannot do anything. That is why we are supposed to check. Okay, if everything was so correct by management, why would audit come? Cut off means transaction should be recorded in correct period. Understood? Okay. So for all item we have to check same. Yeah. Next, measurement. Transactions are recorded at correct amount. Okay. How to check? Contract. Many times contract rate will be different. Invoice rate will be different. Purchase order rate absolutely different. Problem. Okay. So we have to see all rates should be correct. Yeah. Okay. Presentation and disclosure. Transactions are properly presented in the financial statement. Properly presented in the financial statement. Clear? Yes, sir. Fully, super duper, amazingly, mind-blowingly clear. Okay. Presentation. Transactions have been classified and presented fairly in the financial statement. Any doubt? No doubt whatsoever. Fully clear, amazing, mind-blowing. Okay. Income statement assertions. I hope you are clear. Okay. Awesome presentation. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement. What is presentation? Presentation and disclosure. Any doubt? Okay, all are, see, meaning of all is clear. Presented means it's properly shown in schedule 3. As per shown in schedule 3, part 1 of schedule 3, it is presented as per that. Okay, so first try to remember, because in everything we have to check these assertions only. Now P&L, any item is there in the world, you have to check this only. Awesome presentation. Awesome. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement. Presentation and disclosure. Occurrence, completeness, cut off, measurement. Presentation and disclosure. Occurrence, completeness, cut off, measurement. Presentation and disclosure. Clear? Any doubt? Any doubt? Doubt? No. Okay. Shall we go ahead then? Able to learn also? If you are able to learn, will not waste your time. Okay. What will the question come? How to check completeness of sales? How to check completeness measurement of sale? How to check presentation and display? Understood? These are the questions. Now, balance sheet we'll do later, because first half, 1 hour, we have to do only P&L things. Okay. Next 1 hour, we have to do only balance sheet things, sales. First area is sale. In sale, what to check? Always remember, sales is a big account. So ROMM of sales is usually high. There is a high chance there can be risk of material misstatement in sale, because every company wants higher sale. Why higher sale? So higher profit. Why higher profit? So higher share price will be there. always remember entire audit is from listed company point of view. We never think of small people in audit. Okay, small people want to save tax, but this is statutory audit. Okay, continue. Sales is the most important area. As per SA 315, ROMM of sales is always high. Risk of material misstatement. So first understand the process of sale. If the process is good, I will go ahead and test the controls. Okay. If in control testing, I feel controls are really good, then what I will do? Less substantive assertions I will check less. That is what is written. We will test control. We will check sample of items for purchase order, invoice, etc. to test control. We can also do analytical procedure. Okay, do month wise sale. Okay, compare with last year, see the trends in the sale to understand risk are more or less. This is general thing, main thing we are starting now. Number one, audit procedure for sales occurrence. Whenever I start any item, you have to tell me one point. If you tell one, then all rest 5, 6 will be clear. How to check occurrence of sale? Sale has actually occurred or not? Are we showing dummy sale? So number one, what we will see? Any entry is repeated twice. Have you done any entry twice? Second, any invoice which is cancelled. Okay, many times sale is cancelled, but still you have recorded. Is it like that? Okay, that is the another way to check occurrence. Okay, then confirm with customer whether they have received delivery of goods. Okay, customer has not received delivery and you are showing sale. Okay, see in the year end, are there fictitious sales? Okay, customer is not confirmed, you have just prepared the bills. Okay, is the state real? Second, how to check occurrence? Whether sale is dispatched. Trace the sale with shipping documents. If shipping is done in the month of April, how dare you recognize sale in the month of March? You are too manipulative. Understood? Basic thing. If you remember 3, 4 things, you can easily point out 6, 7 points. Okay, over. Read. Any sale is recorded twice, we have to check. Okay, or cancelled sale is there. Second, trace few sales invoice with sales day book. Many people prepare rough day book of sale, so we'll check with that. Simple. Third, obtain confirmation from customer regarding genuineness of sale. You have to take confirmation from customer. Is the sale genuine or not? Okay. Next, any fictitious sales are recorded. You have to check that also. Any dummy sales are recorded or not recorded. Okay, check that. How to check? Dispatch document. Okay, after confirming with customer. If customer is not confirming, sale is dummy. Second, any sales are done in the year end, especially check 30th March, 31st March. Okay, it will be just to inflate the sale, to achieve the targeted figure. So we get that funding round. Okay, next, whether any unearned sale is there. Okay, next, see the sequence of invoice. Okay, many times if bills are missing, there is a fraud. Review sale return. If there are a lot of sale return in the month of April, means these are dummy sales. They were just done to increase the target. Okay. Review unusual transaction. What is unusual? Let me take 3 examples. Entries passed after 12 o'clock in the night. Entries passed by CFO. Entries passed by other than authorized person. Are you clear? These are dummy sales. Easily you can remember if you tell me 4 points. Okay. Number one, sales day book check. Any invoice is recorded twice, check. See, cancelled sales are recorded. Okay. Then see sale return to sale. Okay. What else we can check? Okay. Confirm with customer. Okay. Especially during year end, lot of sales are done. Okay. See, any unearned income is recorded. Approach you understood. You cannot learn this. Come to next one. Completeness. Completeness and cutoff is similar. Completeness and cutoff is similar, almost similar. Okay. How to check completeness? Usually we do overstatement of sale. Understatement is never a tension in life. Remember, no one will show less sale unless subsidy, but forget that case. Completeness. How to ensure sales are complete? They are not inflated. So you have to be very much emotional only in one point. Cutoff, cutoff, cutoff. We will check the dispatch documents to see, okay, when risk and rewards are transferred. There are 2 ways sales are done in life. One is FOB, one is CIF. Not given in your book, just for knowledge. What is FOB? Free on board. What is CIF? Cost insurance freight. What is free on board? Okay, you just have to keep it at the port. As soon as you keep at the port, your responsibility is over, your sale is done. In CIF, full form, cost insurance freight, You have to deliver it to opposite parties location. As soon as it reaches the location, your sale is done. So you have to see it's FOB sale or CIF sale. Based on that, criteria is different. Okay. If few goods of customer you have kept, many times you are saying sale is done, but customer has told keep with us. Confirm with customer. Is it there in agreement? See, sales is recorded as per the invoice or risk and rewards. When is actual sale done? When risk and rewards are transferred as per AS9. Okay, sir. I hope you understood. Okay, so this is what we have to check basically. Then how to check completeness? One more figure I remember. Check with GST. You are showing sale this much. Check multiply by 18% GST this much we have paid. Many times what we do, we inflate the sale, but we don't pay GST to government. Good way of doing fraud. Good way of doing fraud. We should not do. Check reasonableness of sale with GST returns. Okay, or with GST, try to get a fair idea of sale. On 100, GST is 18. So this 18, 100 is how much? Seems good? Okay. Number 1, perform cutoff procedures and see sales are not tempered during year end. Same what I told. Cutoff error will arise when sale is based on invoice rather than risk and rewards. Many times we recognize sale on invoice. We should not risk and reward. Next, credit notes are issued after year end. Means credit note means these were dummy sale. These are full chance of dummy sale. Next, trace shipping document with sales journal. Shipping documents you have to check. Okay. Next, check reconciliation of sale with stock record. Wonderful point. Check the sales with stock record. Opening stock plus this much production minus closing stock. It should match with your sales figure. Okay. Number of unit wise. We are not telling amount wise. Opening stock plus production. Okay. This much stock plus you produce minus this much was leftover stock. Balancing figure should be same. Okay. And then check with GST records. Review GST return and see the revenue reported in P&L. Multiply total sale with GST rate to get GST paid figure. If it reconciles, your comfort will be skyrocketing. Understood? Okay. Simple. Nothing great I am doing. Measurement. Correct amount is there or not of sale. In 1 second we can recognize. Tell me how. How? Simple. Take few transactions from starting to end. Okay, verify few transactions from starting to end. Check everything in those transactions. What you will check? Number 1, you would have sent a quotation. Then customer would have given a purchase order. We want to purchase. Then we would have sent a contract. Okay, sorry, first quotation we would have sent. Then he would have given a purchase order. Then there will be a contract. Third, then you will send the invoice. So contract rate is this much. In purchase order, same rate is there. Invoice also same is there. Okay, comfort will be skyrocketing. It's perfect sale, no problem. Okay. So we have to trace few transactions. Reconcile what? Purchase order, contract, invoice. If the rate is same, comfort will be much higher. Okay. Second, how to see the measurement of sale? The amount is correct. Okay. We can also check by GST. Okay. Verify few invoice, contract with party, same thing. Trace few transactions from starting to end. Recalculate the prices of the transaction as per terms of contract. In contract, 25 rate was there. In invoice, same price is there. Look at the comfort. Okay. If you have export sale, AS11, reconciliation you have to do, recalculate the sale. Next, auditor should understand the operation and related gap issue. Is it point of sale method or percentage completion method? You have to see point of sale method or percentage completion method. Okay. Which method you are there. Compare the sale with related party. Very nice point. Okay. A related party sale and see is the terms proper or not. Are we receiving the amount from the related party? Is board resolution passed? Whenever related party come, I will give you 5 points. Number 1 point. Okay. Compare the rate of related party and review them for collectivity. Second, in related party, board resolution is passed or not. Third, the terms of AS18 are followed or not. Next point, disclosures are done for related parties separately or not. Okay. Last point, whether the transaction is done at arm's length price. Directly 5 questions asked. Okay. Be it any point. Okay. This is a good way. See, point of sale method should be followed or percentage completion. What is point of sale? Whenever sale is done, recognize sale. But in construction contract, okay, remember the building will be constructed for 5 years. They cannot recognize the sale on 5th year. Why? It will be too much late for 4 year loss and 5th year directly so much revenue. So they follow percentage completion. How much ever contract is done, that much revenue they recognize. Usually it is done like that. But that depends on client also. Clear? Okay. So only new point was here, this one. Rest to nothing was there. Presentation disclosure, remember, nothing I can teach you. It is properly presented as per your final accounts. Okay. So here what is given. We will see disclosures are proper as per part 1 of schedule 3. Part 1 of schedule 3 gives the format. Okay. So disclosures are done as per part 1 of schedule 3. Here what I will tell. Whatever you are doing in final accounts. Okay. In final account, what is there? Sale of product is there. Second, sale of service is there. Third, other operating revenue is there. Okay. Brokerage and discount other than trade discount should be disclosed. Trade discount, so don't disclose. It is deducted from sale. Brokerage and discount, if you give, show. Related party separately show as board resolution is passed or not. Whenever related party transaction is done, board of directors should pass a resolution that we have done this transaction. Second, separate recording is done or not. AS 18 is followed or not. Over. Biggest item we are done. What did we do? Awesome presentation. Occurrence, completeness, cut off, measurement. Occurrence, completeness, cut off, measurement, presentation and disclosure. Now to time pass chiller other income. Other income is chiller, interest. How to check? Don't apply brain. More brain you have, more you will go wrong. Very simple. Obtain a list of all investments. See for how much time you have done the investment. Okay, FD is there. FD for how much time? Sir, I started on 1st July. So how much ever? 9 months are left. Okay, 1st July. 9 months on 31st March. Multiply. What is 10 lakh is the amount into 9 upon 12 into what is the rate? 7%. See, is it matching? Perfect. This is the only way you can verify. Second, interest income on FD should be recognized on time proportion basis. Time. Two things you have to consider: amount outstanding and interest rate. Over. Check the amount and interest rate. This much amount, this much time, this much interest rate, cross multiply. If it is matching, your comfort will be here. It is that income which should not be linked to core operations. Of course, FD income is not my core operation. My core operation is goods and service. Second, dividend. When would you recognize dividend? Okay, when right to receive dividend is established. Amount can be reliably measured. Okay, very simple. Right to receive is when established. When opposite party sends an email, you get an email that this much dividend is declared by company. Right to receive is established. This is the rate which is approved by shareholder. Okay, when should dividend be recognized? You have to think as an investor. Okay, it's your income. When right to receive is established, amount can be measured. When it can be measured? When you receive a mail, this is the rate of dividend. It is probable benefits will flow to entity. Simple. Okay. Right to receive is established. Amount can be measured. Benefits will flow to entity. Simple. Clear? Okay. Simple. Whenever shareholders pass a resolution after balance sheet date, that time you can recognize. Means as an investor, you will recognize in next year. Interest income on FD, repeat telecast they have done. Repeat telecast they have done. Okay. Obtain a list of all fixed deposit. In that, check two things: number of days deposit outstanding along with interest rate and number of days. Come to next. Verify arithmetical accuracy of interest by multiplying deposit amount with rate and number of days. Verify the accuracy of interest by multiplying deposit amount with number of days interest. Repeat telecast. For deposits outstanding at the year end, if it's outstanding, trace the balance from the bank. Tell bank, please confirm this is the balance. I am showing this much balance. Yes. Obtain confirmation of interest income from the bank and verify is that matching with your calculation. Bank is showing this much income. As per Calci, you can also calculate. Is it matching? How to calculate? Number of days multiply by 365 divided by into date. Next, obtain a copy of 26 AS. See, bank will deduct TDS on income. When they pay you interest, they will deduct the TDS. Okay, 10%. So as soon as they deduct, reconcile with that. 1000 rupees my income. They have deducted how much? 100. So based on that, I can say 100 is deducted. So what will be my income? 1000. Is my income coming the same in calculator also? comfort will be too high. Okay, if you want to know how much FD interest is there of mine, in 1 second you can tell. You will tell, sir, 26 AS data give. I will give you 26 AS. You can directly tell this much is cut, so this much should be income. Simple. Disclosure. Disclosure. Disclosures are made as per part 1 of schedule 3. Same repeat telecast. What you have to show there? Interest income, dividend income, other income. Next, gain or loss from mutual fund. Last one. How to check mutual fund gain or loss? Okay, very simple. Okay, number one, when should you recognize the gain? When you sell the mutual fund, sell it. Okay, when you sell it. Okay, verify that gain or loss is booked only when transfer of title from the entity. They will say that these are sold. Difference between the redemption price and carrying value of investment. Example. Your mutual fund has NAV of 11 rupees when you purchased. Net asset value per unit value 11. When you are selling, it's 32. 11. So 32 minus 11 into number of units. First you do on Calci. Now check with their record. Is it matching? Perfect. Compare the gain or loss and trace with books of accounts. Difference between redemption and carrying value. Okay. Compare with mutual fund statement. Trace it with books of accounts. Simple. Now, fully out of total 4 children, 1 child is over. You will tell me which child is over. Very simple. In income statement, I have to check 2 things. What 2 things? Okay, I have to check what income, expense. Income is over. Now we are on to expense. Biggest ever expense and the only expense, rest are time pass. Purchase. In purchase also, first write English. First understand the process of purchase. Understand and see whether controls are strong or not. If controls are strong, go ahead and test those controls. Okay, test of controls we will do. Okay, after doing test of controls, what we will do? We will see whether we can rely or not. If we can rely, assertion checking will be less. Test of detail will be less. If we cannot rely, test of detail will be more. But this all is given in module. You don't have to write all this. You will be given only one thing. How to check occurrence. How to check completeness. See here. Auditor needs to verify internal control over purchase. Auditor should see controls are good or not. Auditor selects sample of transactions and checks everything in those transactions. GRN, gatekeeper, invoice. Okay. Analytical procedure also can be done. Last year said same points. Now, occurrence. Tell me whether purchase has actually occurred or not. Whether any purchase is recorded twice. See the purchase done in April. Sorry, March are recorded in March only. See gatekeepers register. Okay. See how to see. Many time I will show dummy purchase also. What will I get with dummy? I will put money in my pocket. I will say for Innova car we had taken on rent. This is actually service, but I am taking just an example. Okay. For Innova we had taken on rent. We had actually never taken the Innova. I just told the vendor prepare dummy invoice and send me. Vendor will say, okay, no problem. I will send, but what I will get? I will say 20% I will give you. What is the invoice value of Innova? He's saying 10,000 per day. So for you want 40,000. I said, I will pay you 4,000. Just prepare the bill. Then I will say all employees due to COVID, we sent in Innova one day or due to late night shift. Who will remember? 4,000 I will give him money for preparing the bill. Rest 36,000 I will put in my pocket. So how to ensure purchase are perfect? Number one, see in gatekeeper entry book is there. Okay, as soon as goods will come in gatekeeper, there is book entry or not. After gatekeeper, okay, quality inspection of the goods is done. Okay, quality inspection department will do. After quality inspection, is it entered in GR and goods receipt note? Okay, first gatekeeper. Second, is it entered in GR and goods receipt note? Third, quality inspection is done or not? If these 3 things are done, it's fair enough to believe that it's a genuine purchase. Okay. Fourth, most important point above all, see there is a vendor selection process. Do you invite quotation? Okay. Do you have any process to select the best vendor? Or any vendor can be selected? Then though there will be a high chance that dummy vendors are there, fictitious vendor are there. Number one, is there vendor selection process? Has anyone approved the purchase? Is vendor selection process approved by anyone? How are vendors finalized? Understood. Because if there is a strong system of finalizing vendor, out of 10 we will finalize one, there is a high chance fraud will not happen. Okay. Okay. Purchase occurrence. Number one, whether any fictitious vendors are there. Purchase have been recorded by following vendor selection process to confirm existence of vendor. Second, now the very simple, see here. Whatever I told you, absolutely same. Number one, when goods are received at factory, is there entry in the factory inward register? After that, GRN. Whether GRN is signed by appropriate person, goods receipt note. After that, quality inspection is done in the factory or not. If it is entered in factory gatekeeper register, goods receipt note also entered in quality inspection, and vendor selection process is also there. Purchase has to be true. What more you will check? Next, three-way checking is done. Very good. Two-way, three-way both is given. I will teach you three-way only. And stock is updated by all people. See, how many evidence? Vendor selection perfect. Also entered in gatekeeper. Also checked by GRN updated. Also quality inspection. Also stock is updated. How many evidence you need? Okay. And three-way match is also there. See, what is three-way match? POGRN invoice. See here, it's written. What is invoice? Quantity into rate. Everyone agrees with this? Invoice is quantity into rate. Quantity I will check with GRN. Goods receipt note. If I ordered 10,000 units, in the invoice 10,000 is written, but I got only 9,800, then I should be billed as per 9,800 units only. How dare you bill me for 10,000? Simple. Simple logic, right? Yes, sir. Fully simple. See here. Quantity into rate. One last time. Quantity is this much. I have been told this is the quantity and this is the rate. Okay. Now my quantity is 10,000 in invoice, but I have received 9,800. Then bill me as per 9,800. Rate. I sent purchase order. This is the rate I am ready to pay. How dare you enter more rate? But if we enter same rate, it's perfect. See, quantity into rate. Quantity should match with GRN. Rate should match with PO. Over. Three-way match. Invoice, GRN, PO. I hope you understood. It's not easy. It's too easy. Special audit of purchase. Now, few extra points they have given. Purchase invoice should be in the name of entity only. Okay. Original invoice should be there. Purchase should be done when risk and rewards are transferred. It's a FOB purchase or CIF. FOB is your purchase when you have received the goods. CIF is your purchase. Sorry, FOB is when they have reached the port. CIF is when you receive. Only then you can recognize your purchase. Invoice should be in the name of entity. In case of related party, whether board of directors resolution is passed, whether transaction is at arm's length price or not. Okay. Auditor should see purchases are capitalized or P&L. What is capitalized? Fixed asset purchase is there or business purchase is there. Unusual transaction, same. Completeness, how to check purchase? Is it complete or not complete? Again, trace with the records, stock records. What is stock record? Opening stock plus purchase minus closing stock, okay, is equal to sales. Okay, you can substitute the formula. Opening stock minus sale. Okay, sorry, opening stock is this much we have sold, this much closing is left over, so this much would be purchased. Directly you can reconcile. Okay, is it matching with that purchase? Perfect, your comfort will be too high. Or cut off, second the cut off we will do. Okay, we will check few purchases done in the March are properly recorded. Also check purchases of April are not recorded in March, but usually reverse happens in purchase. I will purchase in March but show in April. Now you will tell me, why are you showing in April? What is the reason? Purchase is done in March. Then why to? Very simple logic. I want to inflate. I don't want to, many times I don't want to inflate my expense. I want to show lower expense. Okay. Yes, sir. Ensure goods are correctly entered. Goods in transit also have been entered. Okay. If goods are in transit, then we have to see, is it FOB sale or CIF? If CIF is there, then don't recognize this purchase. If FOB is there, it's already your purchase. because his responsibility was to only bring on board. Okay. Obtain WR from management, written representation, all purchase are recorded. Analytical procedure also I can do of purchase. What is analytical? Consumption. See, I will check, okay, whenever this much sales are done, this much RM is consumed. In order to do this much sale or this much production, this much RM is there. So I will see that much RM is ordered or not. If usually to do purchase of, usually to do a production of 1 crore units, 1 crore units, my RM required is 50 crore. So this year I will see how much production we have done. 50 lakhs. So RM required how much? Understood? Okay. RM consumed with manufacturing units of previous year. It is known as analytical. Second, stock composition. Okay. To produce one FG, how many units of A, B and C are required? A this much, B this much, C this much. Okay. I will see same proportion is it used this year. Then completeness, approximately figure match. My comfort on completeness will be on 7th heaven. Okay. Auditor should also see creditor turnover ratio. Quantitative reconciliation is the last point. I told no. Closing stock with opening stock, purchase, consumption. Disclosures. Part 1 of Schedule 3. Related party purchase are separately shown. Purchase of stock in trade is separately shown. Goods in transit separately shown. Changes in finished goods, stock in trade, WIP is shown. Over. Rest all are time pass now. All are super. See, don't try to think that in every chapter I will score 5 on 5. Here 2-3 questions will come from this chapter, but you cannot score full 5. It's okay. If I get 3 also, it's comfortable. 2.5, 3, 3.5. Okay. We cannot get 5. If we try to get 5 here, other chapter will be left. Okay, so it's okay. Every chapter has a different philosophy. Employee benefit, even more simpler. In payroll, what do you want to check? Occurrence, completeness, measurement, everything at once given. In module also given in the same order. Don't worry. From module only we have copied. How to check? Employee benefit is payroll. Payroll is salary. Completeness, how to check? Number 1, okay. See, the process of selecting, process of employee is proper or not. Attendance records are proper or not. Is there a chance of dummy employee? Then he would be paid salary, but it would be taken by supervisor. Many times what I will enter? I don't have money, so I will enter. We have kept 3 new workers. See whether the attendance process is strong. Is there any chance of dummy workers getting entered in the system? Or is there a proper system that person with appointment letter, person with physical presence, where attendance, only his attendance will be recorded. See the attendance process to see dummy workers can be entered or not. Because if they can be entered, I will pay them salary but put in my pocket. Second, in the year end, obtain a list of existing employee, new employee, left employee. 3 times divide. Existing employee, new employee, left employee. 3 parts. What I will do with this? Very simple. In 1 minute over. Okay. For which employee? Existing employees. Okay. Sorry, first let's take new employee. For new employee, see the salaries as per the contract made with them. I made a contract with them. We will pay you this much salary. Are we paying them that much salary or not? Okay. Because if 1 month salary is perfect, all other months will be perfect. For left employee, all the employees who have left. Okay. What I will check? Very simple. For all the employees who have left this company, oh my God, we will check full and final settlement. Okay, whether full and final settlement is done properly or not. Okay, full and final. Anything recoverable from them, have we recovered? For existing employees, what to do? Check salary per employee per month. Compare with last year. Per employee per month salary is this much. How it has increased? Oh, we have done some research. So 4 new engineer we appointed. Analytical check. Then you have to see PF, ESIC is properly paid or not. Okay. From that also you can reconcile. PF is this much, salary is this much. So PF should be 12%. Is it coming the same? Okay. Means everything is proper. Read. Obtain understanding of employees. Process of capturing the attendance. Okay. What's your process of capturing attendance? Is there any chance of dummy worker being included? Okay. Next. Obtain the list of employees. 3 parts. Number 1, new, left employee and existing. New, left, existing. Divided into 3 parts. New, leavers and continuing. For new people, check the appointment letter. Is the salary matching with appointment letter or are we paying them more? Okay. And subsequent month will be proper. For resigned employee, see full and final settlement. All dues they have paid. They have to pay notice period salary sometimes. Have they paid? Compare average salary per month per employee to find out variation. Provision is made for PF, ESIC gratuity. See, this we have to pay later, but have you made proper provision? Why? Because employee will retire at that time we will pay. But we still have to do provision as per matching principle. He has given service this year. So this actuary will calculate. Have we done that? Compare PF, ESIC with basic salary. Multiply basic salary with 12%. You will get PF. Is it matching approximately or not? Matching, then your comfort will be skyrocketing. Disclosure. Ensure disclosures are done as per schedule 3 or not. Simple. Employee benefits, salary and wages, PF, staff welfare is shown separately. Depreciation and amortization, even more simple. Whether first, see what depreciation is, amortization is done on all assets or not. The method of depreciation is proper or not. Okay. Third, what you will check. Okay. Obtain a list of all the assets and do depreciation rationalization. How to do? You took the list. Then see what is the rate applicable. Plant and machinery, what is Companies Act rate? Okay, furniture and fixture, what is the rate? This land and building, what is the rate? Multiply and see your depreciation calculation is matching with system or not. If it is matching with system, comfort will be excellent. Okay, if any assets are deleted, any assets are discarded, see depreciation is not charged on them. Otherwise, negative asset value will become. Many times in system, we forget to remove asset. System will still charge depreciation. It will become negative asset. So say check that also. Very simple. Obtain understanding of entities method of charging depreciation. Obtain fixed asset register as revenue items can be capitalized. Obtain sample of fixed assets based on depreciation charge. Obtain list of all. Ensure intangible assets like goodwill, patent have been properly amortized. Depreciation is charged from ready to use and not put to use. Very important. What is ready to use? Ready. See, car is ready. Okay, you have not put, you bought a Mercedes. Depreciation should be charged. Sir, but I am not using. Still, then the double should be charged. Are you clear? Because car will get spoiled. Okay, it should be ready to use. If you use or don't use, your headache. As soon as the car comes out of showroom, 30% value down. You take a Mercedes, okay, as soon as you take it out of showroom or in the showroom also, if you keep 5 minutes and you decide, "Arey yaar, I did not want to buy, actually I did big mistake," you will go to sell 30% less. Ensure depreciation on revalued item is proper. Depreciation is as per the IT Act, okay. Ensure additions as per IT Act. And check depreciation is proper. Is it matching with accounting list also? Additions, depreciation will be different. Analytical procedure you can do what I told you. All assets multiply with the rate and will get one figure. Depreciation is charged as per useful life of the PPE, plant, property, equipment and intangible asset. Residual value is proper. If you have changed the method of depreciation, sorry, change in life is there. Effect should be prospective and not retrospective. Okay, change in life is there. Prospective effect is given. Whatever you know about PPE standard, you can write here. Disclosure. Disclosure will be whatever is the formula is the disclosure. Accounting policy for depreciation, residual value, useful life of asset, simple, same thing. And depreciation method. Other expense, rent. Now one minute is there. First of all, take rent agreement and see whatever is written in agreement, same rent is charged. Second, see it is charged for all 12 months. Have we received the rent or not? Okay. See whether we are, it's income, no. Sorry, expense is there. Okay. So take rent agreement. Okay. See, rent is paid for all 12 months. If there is a escalation clause, 10% rate will increase from July. See, effect of that is given or not. See, rent is paid for all 12 months as per agreement or not. Over. Obtain month-wise rent. Verify expense of all 12 months is booked properly or not. Third, special consideration is given to escalation. If the rent has increased, check that whether that is paid. Also see agreement is in the name of entity. Most important thing, okay. Agreement should be in your name and whether you are using that entity, okay. Many times you have taken premise on rent, but your wife's showroom is going on there. Wife is selling jewelry from there. Wrong. Then it should not be charged as a part of company's rent. Over. Power fuel. See, monthly power fuel is proper. Try to link it with production units. Okay. For to make 1 unit of FG, we require this much power. Then see how much power. We made this many units. This much power is used. Wonderful factory light bill you can do like that. And if you can do, amazing. Obtain month-wise schedule. Verify all 12 months expense charge. Multiply the monthly power units with the rate. Link the electricity bill with FG production. Verify reasons of variation. Okay. Simple? Yes, sir. Amazing. Next, insurance. 1 minute over. Take copy of all insurance policies. See, the premium is properly charged, okay, in PNL. If there is a prepaid, because insurance you have taken in July, year will end in March. See, proper distinguish is made between this year and prepaid insurance. Okay, over. Obtain summary of insurance policy. Verify expenses are correctly classified between prepaid and current period. Over. Legal and profession. If there is a monthly agreement with a lawyer, see all 12 months payment is done. If there is any new lawyer, okay, if there is any new legal advisor, okay, we will see provision is booked for same case, okay. Check the agreement and see which case we have paid the fees. That case provision is booked or not, okay. Month-wise, consultant-wise summary. In case of monthly agreement, see all 12 months salary is paid. In case non-recurring expense, verify a sample and vouch of the attributes of same. What is attribute? Characteristic. If that is a case, why have we not booked the provision for that case? In case of legal expense, see provision is made for dispute for which fees are paid. Travel, last one, travel, repair, maintenance, printing, stationery. How to check all this? Invoices, check all 12 months invoice. Compare with last year. Third, compare with per unit. But usually, how can stationery compared with production? I don't understand. Repairs may be little. Travel, how can you compare with production? Okay, but still they have written. Monthly summary you can prepare to see trends. Okay. Second, perform analytical procedure regarding reasonableness of expense with per unit of production. Difficult. How you can do per unit of travel? Okay. Auditor should see expense per unit and compare with last year. To know this year our expense have increased or decreased. Okay, this much increased. Maybe due to inflation. Okay, nominal. Disclosure. As per final accounts, part 1 of schedule 3, rent, insurance, power, repair, legal, printing, travel. Miscellaneous. Tell me, fully comfortable or not comfortable? We are done with P and L. Income done, expense done. Over. Not even one word skipped. Okay. Now only dash is pending. 1 hour was this. 1 hour is balance sheet. Our P and L assertions are over. Everyone. Now only balance sheet pending. Perfect. Now in balance sheet, what we will check? Again, assertions. Over. Balance sheet also we will check assertions. What do you mean by assertions? Very simple. Balance sheet assertions is inventory. Okay, let's take example of inventory here. Okay, same technique, remember. Concentrate, absolutely same. Awesome presentation. Occurrence, completeness, cut off, measurement. Okay, presentation and disclosure. Instead of occurrence, here the word is what? Okay, occurrence. We cannot say inventory has occurred. We will say inventory has existence. Same thing. Word is different. We cannot say fixed asset have occurred. Fixed asset exist. How to check existence? In one word, physical verification. Over. So instead of occurrence, what's the word here? Exist. Meaning is same. Whenever you talk P&L, we speak occurrence. But whenever we tell balance sheet, we cannot say asset has occurred. We say asset or liability exists or not. And how to check whether fixed asset is there? Physical verification. How to check inventory is there? Physical verification. Completeness is same, all assets, liabilities, income, all asset, liability are complete, okay, are complete, that were supposed to be recorded is recorded, okay. Overstatement, understatement is not there. Cutoff is there, should be recorded in correct period. If you have purchased asset this year, record this year. Next year, then next year. Now, instead of measurement, we have valuation here. We see, transactions are measured. Asset cannot be measured. Asset is valued. Inventory cannot be measured. Inventory is valued. Okay. Same meaning. Same. The word has changed. Only English has changed. From measurement, it is now valuation. Asset and liability are correctly valued. If it's 700 crore value of plant and machinery, it's proper. Take last year figure, add additions, minus debris. This year figure should come. It's correctly valued. Okay. How to check? Invoice. All revenue expense are not capitalized. All these things. So existence, completeness, cut off, valuation. Here one more, presentation and disclosure is there. Whether it's properly presented as per Schedule 3. Schedule 3. Now come to rights and obligation. Always remember, here one extra assertion is added. Asset is my right, liability is my obligation. But when will I say asset is my right? Okay. When the invoice is in my name. When can I say this house is mine? If the title deed is in my name. If immovable property is in my name. If legal documents are in my name. So I will check invoice. I will check property documents. Okay. If they are in my name, asset is my right. When I will say liability is my obligation. In loan agreement, if company's name is written, company has to pay the liability. If the creditor invoice is in my name, so I have to pay creditor. Simple. So there is awesome presentation. You are also same. Don't look for new technique or else you will be confused. Same. Instead of occurrence, existence. Completeness, cut off, measurement. No, no, no. Valuation. Presentation and disclosure. Rights and obligation. Presentation and disclosure. Rights and obligation. Simple. Simple. Okay. So balance sheet, what we will check? Very simple. Tell me one word, I will check. For all the balance sheet items, very simple, one word. Awesome presentation, but in awesome letter. Instead of occurrence, existence, completeness, cut off, instead of measurement, valuation, rights and obligation, presentation and disclosure. Over. Now, any damn item, same things we will check. Any damn item, let them go. Start. 1, 2, 3. Let's rock. Audit of tangible assets. So first we'll take assets, then we'll finish liability, but all super duper easy. Asset. PPE, plant property equipment. Okay. How to check existence of PPE? You tell me. Whether plant property equipment exists. Physical verification. We will see management is doing physical verification at regular intervals. Okay. We will see the physical verification report of management is backed by sheets. We will check the sheets are proper. Is there adequate tagging done? They are saying that we have checked the tags. Is the tagging done on all assets? Okay. What is the tag? There will be label on the asset PQR. This asset is 4329. This is 8225. Okay. Random basis you can check. Check the sheets of management and see whether assets are there properly or not. Okay. Yes. And if the entity's plan is reasonable in checking or not. If it's proper existence, we will have no doubt. Only way to check existence is physical verification. Read. Review entity's plan for physical verification. Entity's plan you check. Second, evidence of those performing PPE should be examined. Who has done physical testing, physical? Bring them. Obtain physical verification report, okay, backed by working sheets from entity. Report along with the working sheet. Okay, in that what you will check? All items are tagged. All the items in factory have proper tagging. Okay, reconciliation of items with fixed asset register. You order register. Where is register? This. I want to check few items. Check it. Verify discrepancies if found. If you have found any difference, how they are dealt with the same. If more than 10%, it's a material difference. Simple. Simple. Now, inventory also existence. Absolutely same. Why I am telling you? So at that time again same I will not teach. See here. Inventory. Absolutely same. No change. Review entities plan for inventory. Second, ensure goods consigned means others goods are not included. If other goods are kept at your factory, don't include. Many times we will also keep our goods others. We have to consider that. That is part of our inventory. Take maybe physical confirmation from them. Okay. Auditor should participate in inventory counting. Test count of auditors. Same as SA 501 if you remember. SA 501. Audit consideration. Specific consideration for selected item. There. Observe the employees are following the plan. All items are tagged. There is proper supervision. Okay. Reconciliation of test count with the tags. Okay. Significant difference is there. Properly adjusted. Same. Now let's come back. Let's come back. Additions. Okay. We have to check addition. In addition, what we need to include? Don't include third party additions. If anyone has kept goods at your godown, plant property, don't include that. But if our assets are kept at other place, okay, maybe we have kept our machine at a other place because our factory was full, we have to include that. Don't include third party additions. But if our additions are kept at third party, then we have to include. Verify movement in PPE schedule. How to check additions? Movement check. Opening plus during the year minus deletion is closing. So last year opening you had checked plus add additions minus deletion. Is it matching with closing? If it is matching with closing, additions are correct. Check arithmetical accuracy. Figures also trace opening balance with last year. Add addition minus closing. Sorry, minus deletion should match with closing. Now additions we want to check. Verify quotations were asked before buying the machine. If they were asked, then the system is perfect. Verify additions are approved by appropriate person. There is a proper sign of department head. Okay. All expenses are capitalized. Day-to-day expense should be charged to P&L. Invoices, see the invoice to see correct capitalization is done. Okay. It's more of measurement. Verify deletions and find out the reason. More than completeness, they've included measurement point here. Okay. Verify the deletion and see effect is properly given in P&L. Simple. All these points which I can see here. Last four. Expenses, capitalized. These are basically of valuation. But in valuation, they have given what? Only depreciation. See, depreciation is charged on all items or not. Okay. See, amortization though we'll see in intangible asset. Depreciation is properly charged. If the asset is even below depreciation, impairment is there. Okay. See, impairment loss is properly given as per AS 28. Verify depreciation is charged on all plant property equipment unless it is a freehold land. Freehold land doesn't have depreciation. Okay, because land is always less, so it's an appreciating value. But if you do land and building, it will depreciate. Verify proper method of depreciation is charged as per benefits linked by entity. Okay, benefits consumed. If you feel SLM is best, follow that. If you feel WDV is best, follow that. If you feel your depreciation is based on number of units consumed, this machine will work for 80,000 units. This year I produced how much? 17,000. How much depreciation? Value into 17 upon 80,000 over. Okay. If your machine is like that. Third, see whether impairment assessment is done as per AS 28. Over. Very simple. Existence I checked. Completeness I checked. Okay. Then what I checked? Valuation I checked. Rights and obligations. Simple. Asset should be in the name of entity. If there is a conveyance deed or sale deed, it should be in the name of entity, immovable property. Many times I don't do sales deed in my name. You will ask me, why am I not doing sale deed? Because I have to pay GST. What many people do? Buy the asset because they will sell in 6 months. Then why to buy? For trading. They will buy the asset, sell at a higher value. They do that. Buy the asset, then sell to someone. Okay, but they will not do GST. Same year they will sell. But many times I am not able to sell. Then see, sale deed should be in my name. Only then I can tell it is my asset. Okay. Many times I will give the asset to others as a pledge, as a mortgage. Verify register of charges to see if the asset is pledged and against it loan is taken. But in register of charges, what I will write? Asset is mine, but I have given as a security to third person. So I cannot sell the asset. There are several ways to check asset is mine or not. How to check? Simple. All invoice should be in name of entity. Second, for all additions, see conveyance or sale deed to see who is the real owner. Third, auditor should see original title deeds of immovable property. I will check the title deed. House should be in your dad's name. Only then it is your house. Third, in case original deeds are with third party, many times we keep with bank, third party. Take confirmation from third party. Simple. In addition, if I have given as a pledge, okay, I will verify register of charges to see whether PPE is given as a security to third party. Okay, if I have given a security, register of charge. Simple. Disclosure. Over. Disclosures are made as per part 1 of schedule 3. Land separate, building separate, PPE separate, furniture, vehicle, office, others. Assets under lease also show separately. Over. Intangible asset, goodwill, patent, copyright, mastheads, publishing title, existence. How to check intangible asset existence? Tell me. It's an identifiable non-monetary asset. We know it's an asset, but actually it's not an asset. You cannot touch goodwill. Show me goodwill. How to show physical verification? It's identifiable but non-monetary asset. We know you are there, but you are not there. It's an identifiable non-monetary asset. I know this is an asset, but this is not an asset. How to check? So it should be in active use in production or supply of goods and service. Is Apple is able to sell phones with its brand name, with half Apple? If Apple is selling so many iPhones, the brand name is there. It should be in active use in production or supply of goods and service or rental to others. I can give franchisee rights also in the name of Apple. I can, in the name of McDonald's, give franchisee. Then that intangible asset is there. Or if design and drawings are intangible asset, you are saying our design and our drawing. Are those design and drawing used in the goods? If they are used, intangible asset will exist. Simple. Any brand name will exist if I am making use of brand name in production and supply of goods and service. If it is design and drawing, I am using those designs today, then it's okay. Since intangible asset is identifiable non-monetary asset without physical substance, we have to see their use in production or supply of goods and service or rental to others for admin purpose. Simple. Design and drawing. For products for which design and drawing is purchased, are those sold by entity? If these products are sold, design and drawing are valid. Understood? Okay. Intangible asset is not in active use. But if those design and drawings are not used, they are of outdated product, write them off. Write them off. Okay. Entire asset should be amortized. Additions, same procedure. Verify movement in intangible asset. Opening plus addition minus deletion. If they match with closing, perfect. Arithmetical accuracy. Assets are authorized by appropriate person. Proper procedure like code standards are there. Very important. No research cost is capitalized. Always remember, any intangible asset divide into two parts. Divide into research and development. Research, at research stage, we don't know asset will be developed or not. Pharma companies do crores of research. They don't know medicine will be developed or not. Once they receive approval, development will start. From that day, you can capitalize because we know some asset is going to be developed. From the day you know something is going to be developed, its development cost. As per AS 26, research should be charged to P&L. Check the certificate report given to the entity. Date of such intangible asset is linked to commercial production. From this date, you can start commercial production. From that date, you can capitalize maybe. Deletion procedure is proper or not. Okay. Valuation. Simple. Whether entity has amortized all intangible assets. The method used for amortization is as per the benefits consumed by entity. If the value is even below more than amortization, see, impairment loss is charged. Okay. Impairment of goodwill is very complex. Maybe you will learn in CA final, or maybe if not even CA final, you will learn only. After that, when you will learn. Okay. CCM. Amortized all intangible assets. Amortization method reflects patterns consumed by entity. Auditor has, management has done impairment assessment or not. Simple. Rights and obligation. Simple. All the intangible assets should be in the name of entity. Over. Disclosure. Proper disclosure is of goodwill, brand, software, masthead, mining right, publishing title, licenses. Over. Next, loan and advance. What you want to check in loans and advance? Existence. You tell me how to check existence of loan. Does loan exist? Physical confirmation. Okay. External confirmation. If that party says, yes, you have given me loan. If their balance is in their book, okay. Confirmed. See here, same one only. For existence of loan in advance, direct confirmation should be done. Same like debtor. But here we can also confirm principal amount, interest, terms of loan. All this we can confirm. Agreement. Agreement is another way. How to ensure completeness? Take the list. Management give me list of all the loans. See whether same loans are there. For new loans, what to check? Okay. See board resolution authorizing a new loan. If the loans are given to related party, okay, what we will check? If the rates are proper or not. Terms and conditions are proper. Okay. Are they properly secured? Terms of repayment are proper. Obtain list of loans and advance. Second, verify loan agreements in respect of loan outstanding. Okay, see the agreement. Third, only loan is granted if agreed by memorandum and articles. Inspect the minutes of board of director to confirm all the loans are approved by board of director. If it's related party, see at arm's length price. Most important, if you have given any advance to government authority, see it's reflecting in online returns. You have to given, okay, is it reflecting in online returns? Okay. Advance for GST, is it telling in the books of accounts or not? Okay. Simple. Any doubt? No doubt, sir. Now, valuation, even more simple. Assess the provision for bad and doubtful debts is done for all the loans in which we are not receiving amount. So classify the loan. How you could classify? Aging report. Aging means how much time not received, not currently due. 30 days due, 30 to 60 days due, 60 to 180 days due, 180 to 365 days due, more than 365 days. Especially for 180 to 365 and more than 365. Why are you not paying? Agreed not paying. Why are you not booking provision? After analysis, discuss with management why a provision is not done. Second, assess the bad loan to see if provision is booked or not. Check write-off is authorized by appropriate authority. If foreign currency loan is there in valuation, always remember, restated as per AS 11. Simple. Had I not been there, you would have still told me this only. Disclosure. Security deposit, loan to related party, capital advance, other loan separately disclosed. Disclosures you just have to copy from there. You cannot learn. Okay. In real life, I am telling. In all the loans, what we'll do? Secured, considered good. Unsecured, but still good, and doubtful ones. You have to show separately. Bad and doubtful show separately for all loans. Seems good? Good till here. Tell me, trade receivable. Debtor. Absolutely same as sales. How to check existence of debtor? Physical confirmation. Okay. You tell me what else we can do except external confirmation. Tell me. Chalo. Invoice and delivery notes, absolutely perfect. Bill, perfect, perfect, perfect. Very good. Excellent. Lot of points you have told. Number one, check whether control exists. Any invoices, same point repeat. Any invoices recorded more than once. Ask for aging report. Okay. Check whether realization is done invoice wise or risk and reward wise. Perfect. If any balance is outstanding for longer period of time, ask the reason why this balance is outstanding. Okay. Most important, send confirmation to all. Small accounts on random, big accounts fully. We can send four types of positive, negative. I hope you remember. SA505. Okay. Any discrepancy, do further inquiry. Review sale and accounts with last year trends. Okay. In last year, this much sale, this much was debtor. This year, is it the same? Then analytical will be good. Okay. I hope you understood. Absolutely copy paste of same. So I will not go very much detail here. Completeness. Same like cutoff. See the last 5 transactions to see. Okay. Goods are dispatched, only then sales are recorded. Otherwise, you cannot record the sale because sale should not be recorded on invoice. I am repeating all this. It should be recorded based on risk and rewards. Ensure all the goods prior to year end are dispatched, only then recognize in debtor. Third, trace the few invoice in debtor with original amount to see correct amount is recorded. Okay. Match invoice with shipping date. For some goods, that are not dispatched, okay, but it says bill on hold. Bill on hold means what? Bill and hold. Bill but keep the goods with you. Check terms with customer. Many times they will tell no problem, bill us, we don't want the goods right now, but bill us right now. Okay, so check terms with customer, why they have told like that. Okay, maybe their go down is full or whatever, rates are going to increase, then you can recognize the same. Every time they are not wrong. Many times they will tell bill and hold with you. Now you say why? Because rates will increase in future. Okay, no problem. But what if tomorrow something happens? Responsibility is ours. We trust you. Don't worry. Okay. Review sale return after year end to see profits are inflated. Okay. Year end, check the sales return. Same thing. Discount is valuation. Valuation, what do you have to do? Okay. Classify all the debtors not currently due. 30 to 60 days, 60 to 180, 180 to 365, more than 365. Obtain a list of debtors, compare with last year. Analyze doubtful debts and see whether they are not included in provision. Okay, and see provision of debtors is done at a reasonable rate. Okay, for all the outstanding for more than 1 year, 20%, 10, whatever you feel adequate. Check all the write-off is authorized by appropriate person. Same. Now the very time pass. 1 minute over. Cash and cash equivalents. Existence, completeness, valuation, existence, completeness, valuation, rights and obligation, presentation, disclosure, all in once. Cash balance, what you will check? Check, go do physical surprise check of cash balance. Okay. And while doing the surprise check, okay, don't do on year end because they know year end you are going to come. So they will write everything perfect. Go on any random day and do what? Cash verification. Go there and do cash verification. While doing, always ensure auditor is present. While doing, always ensure auditor is present in the cash verification. Now you will ask me why auditor is compulsory to be present in cash verification. Okay, sorry, cashier should also be present. You will say why cashier should be present? Because many times he will tell you have done fraud. Now we tell, arey yaar, this cash is less. You have removed. I think you removed. Why will I remove? I am auditor. You are there with me only. So keep him also together. If the cash balance is kept at branches with the people, okay, what to do? Verify. Go there also. Go there also. Are you clear? So I hope you are clear. Cash and cash equivalent. Go everywhere. For bank, what to do? Take confirmation from the bank. If they are not giving confirmation, check online balance. Okay. Is online balance matching on 31st March? If that is also not possible, go to bank. You have to after Satyam fraud, we have to physically go to the bank to verify. Okay. Is the balance matching or not? All points are not simple, super duper simple. One time if you read 100%, you will remember. Surprise check should be done for cash balance, not on the year end. BRS also we can do, absolutely perfect, absolutely. But anytime after year end you can do. Okay. Anytime during year end, anytime after year end. Okay. Cash must be kept on last day you will keep to tally. So don't do on last day. If it is at more than one place, head office, branch, employee, we should test check to ensure there are no malpractices. It is recommended cashier should be present while counting the cash. Otherwise, blame will come on auditor. Okay. If there is rough cash book, okay, check the entries from the main cash book. If there is a rough cash book, see that also, okay, and see entries are made in main cash book. Many times I will write in rough, but in main I will inflate the things, okay. For example, refreshment expense. In rough I wrote 600, but in main I wrote 700 and 100 rupees in pocket. So that also check. We should check the BRS and client system of making bank reconciliation statement. A significant and important activity is to contact the bank, okay, and confirm current account deposits, okay, saving account deposits, escrow account, okay. Certain accounts are used only for dividend, check that also. Check 100% confirmation in case of what? Bank account. Compulsory. Why? You will tell me. It's very compulsory after Satyam fraud, okay. Check them with bank statement or send the members of audit team to confirm. In addition, last point, okay, foreign currency accounts are restated as per AS 11. Foreign currency account restate because dollar rate will change. Simple, easy, no super duper easy. Inventory existence already done. Ownership inventory should be in the name, okay, our name it should be. Consigned goods, if others goods are kept, don't include. Collateral agreement, you have given inventory to as a security to third person for loan, etc. Examine invoice. For inventory kept with third party, take confirmation. Inventory valuation, divide into two parts, RM, WIP, FG, all simple. Costing, remember. In raw material valuation, see the rates are matching with what? Invoice or not. If standard cost method is used, see the appropriation of standard cost is proper. See what all things should be included in raw material, okay. Maybe carriage inward will be included, non-refundable duties will be included. Remember your costing. See, depending upon how business operate, see FIFO or weighted average method. Reasonableness of method is proper if your business is FIFO based or weighted average, see that. Second, ascertain what elements are included in cost. Carriage inward, non-refundable. Second, if standard costs are used, see the method of standard cost. Test check the prices, okay, with invoice received. Follow up on damage or obsolete inventory with a view to establish NRV. Clear? Okay. This last point we forgot, standard cost. Test check the prices with invoice, okay. If raw material are lying idle since long time, then they should be valued at NRV, net realizable value. Don't forget that. For damaged or obsolete inventory, find out the NRV. Explain or understood? Understood. WIP. What do you mean by WIP now? Work in progress. Even more simple. Okay, first of all, see the method of understanding working. It's very difficult to find out WIP. Why? You will tell me, sir, why is it difficult to find out? How much windmill is complete? How you will know? Okay, I am not a champion of windmill. How I will know 40% complete, 30%? First, see the basis of WIP is proper. If you remember our working capital chapter, those of you who don't know, we teach FM, SM audit the best in India. So in our FM working capital chapter, we take raw material 100% and overheads and labor 50. You remember? Okay. So here also we will see, okay, that valuation is proper or not. What is the basis of valuation? How much overheads and labor to consider? That one. Understand how stage of production is measured. In case of estimate, what is the use of how you have arrived at such estimate 40% complete, 50%? Ascertain what elements are included in cost. If overheads are included, a certain basis of those overheads are proper or not. Ensure. Material exclude abnormal cost. Don't exclude abnormal. Finished goods valuation. Ensure what costs are included in the finished goods. Okay. Finished good to simple. Okay. What is included in the finished good? What's the procedure of valuation of finished goods? Overheads, labor. Okay. Don't include selling expense in finished good. If you remember, why? Only to manufacture the goods. Follow up on damaged inventory. Okay. Whichever is damaged, this NRV should be reduced. This FG is lying since 6 years, 4 years. NRV, the value is much lower, net realizable value. Request client to provide breakup 0 to 30, 30 to 60, 60 to 120, 120 to 180, 180 and above. 60 to 90, 90 to 180, 180, 360, 365 and above. Especially on older, why you have not done provision? Do the provision, find out the NRV, see the write-off is authorized by appropriate person. In all valuations, these 3 points are there. Write-off is done by appropriate person, proper write-off is done. See the vendor list to determine price is less than current price. If the price has reduced, charge the actual price because we have to show inventory value today. Verify correct application of cost or NRV. See the stock turnover ratio to find out obsolete inventory. Clear? See, this inventory is not getting sold only, and this obsolete inventory, write them off. Simple. Share capital, even more simple. In share capital, now only 2 things are there, okay, because trade payables and all is absolutely same as purchase, okay. So very simple, share capital. First of all, real, we are done with 3 things, just 20 minutes now left or 15 minutes over. What all we are done with? Number 1, assets. So number 1, income. Number 2, expense. Number 3, asset. Number 4, and the last thing left is liability. In liability, share capital will be there, reserves will be there, borrowings will be there. Current liability to same, okay. Start. Share capital. Share capital, what I want to check? Existence, completeness, valuation. Remember, in real life, 99.99% times, okay, share capital is same. So just compare with last year. Authorized, issued, paid up. Is it matching with this year? Then nothing to do. Okay. Trace with last year. Is it matching with this year? Absolutely nothing to do. Okay. Second, okay, I trace the share. But if there is a change, then lot of things to do. Okay, but if there is change in authorized, issued, paid up share capital, then see it is as per the AOA, MOA. Okay, if we have increased the paid up share capital, see the terms of company law are followed or not. Now more of a company law lecture will be there. Okay, all the terms. If there is increase in authorized and paid up share capital, various forms you need to file, whether you have filed the same. Okay, if you have issued new capital, whether terms of issue are proper, okay, a minimum subscription criteria is fulfilled, separate bank account is there, okay, share application money is received properly, 100 things, compliance of SEBI is there. If new issue, see, share capital can either be done in 5 minutes or it will take 10 days. Why 5 minutes? If no change, 99% time no change, so same in real life. But if there is a new issue, then to unlimited time you need to spend. Read. Tally the share capital authorized, issued and paid up of last year with audited statement. Second, in case there is no change, obtain confirmation from management. There is no change in the capital structure. Third, in case there is a change, paid up capital is within the limits of authorized share capital. Authorized share capital should be examined by verifying MOA, Memorandum of Association. Okay, authorized share capital. Obtain, see the paid up share capital is within the limits of authorized share capital. Authorized share capital can be done by checking what? MOA, Memorandum of Association. Obtain copies of relevant resolution passed at the meeting of BOD authorizing increase or decrease in share capital. See the resolution passed of board of directors. Okay, for increase or decrease in share capital, resolution is properly passed or not. Next, in case of fresh issue, minimum, this all you know, law, try to write maximum law, minimum subscription, minimum application money, separate bank account, payment of commission is done. No shares are issued at discount. Compliance with SEBI is done or not. Obtain and verify copies of form filed with MCA. Whichever form you will file, okay, SH7 for increase in authorized share capital. Pass 3, increase in paid up share capital. You have to remember this, okay? If it comes directly, you will get 4 marks. SH7, increase in authorized share capital. Pass 3, paid up share capital. In case of increase in share capital, Company has correctly calculated the stamp fees and duty payable to MCA, Ministry of Corporate Affairs. Okay, over. Shares issued at premium. Okay, whenever shares are issued at premium, see proper bank account debit to equity share capital to security premium. Over. Bank account debit to equity. See, separately money is credited to security premium. Security premium cannot be used for five purposes. Whole world knows this. Do you remember what are five purposes? Number one, for issuing fully paid up. It can be used for issuing fully paid up bonus shares. Okay. It can be used only for five. For writing of preliminary expenses. For giving discount on issue of shares. All these points are there. See, in case shares are issued at premium, verify. Adequate premium is transferred to security premium. Application out of security premium is used only for five purposes. Buyback of share purpose. Towards issue of fully paid up bonus share. Writing of preliminary expense, writing of any other expense in connection with issue of share, premium payable on redemption of shares or debenture for buyback of the share. Simple. This you know in company law. Okay, same. Okay, so security premium. See, the amount is credited to security premium account, and that security premium can be used only for five purposes: bonus share. Okay, fully paid up bonus share. Second, for buyback of the share. Third, for writing of preliminary expense. Fourth, any other expense incurred in connection with issue of share. And last, premium payable on redemption of preference share or debenture. Over. Reduction of share capital. Many time companies going through downturn. Okay, company's wealth is suffering. Okay, company is not able to repay liabilities. Then we go to tribunal. Okay, then tribunal will revise the terms and conditions. Okay, and words will be used and reduced. That is internal reconstruction chapter. You have solved enough sums on that. You have a fair idea. Whenever there is reduction of share capital, 4 or 5 points. Number one, whether tribunal order is passed for reduction of share capital, see the terms are fulfilled or not. Third, if tribunal has told you have to use the words and reduced, whether you are using the same words or not. Okay, the tribunal copy is filed with ROC or not. Okay, you have to tell that also. Okay, then I hope it's okay. Same thing. Okay, see here. Auditor has to follow requirements of section 66. I hope you know whatever you have learned that. Copy paste. Special resolution is required at shareholder meeting for reduction of share capital. See, special resolution is passed for reduction of share capital because it's a big thing. Special resolution, not ordinary. Special resolution is passed. Second, verify articles authorize reduction of share capital allowed as per AOA. MOA is also suitably amended. AOA and MOA, what's the difference? MOA is to the World Memorandum of Association. What are objectives of company? What we intend to do? AOA is internal rules and regulation. So see whether AOA is amended. See whether MOA is suitably amended for reduction in share capital. Any default you have done in the payable of interest on deposits, etc. Okay. Examine order of tribunal confirming the reduction and verify the copies filed with ROC. Company has complied with all conditions given by tribunal for reduction. Check the registered certificate as regard to reduction of share capital. See the words and reduced have been used. Okay, if tribunal has told the same. Disclosure very simple. How many shares are there? How many new are issued? Okay, what's the change, etc. Reserves and surplus. Existence, completeness, valuation. Absolutely same. Picture perfect same. How to check reserves and surplus? First of all, closing last year should be matched with the opening. Last year closing, this year opening. Whatever we have earned during this year, is that added in P&L and closing should match. Last year closing, this year opening, plus additions, okay, of P&L closing. Trace the opening balance with year end. For additions in current year, okay, trace the movement of P&L during the year. Check the movement of P&L during the year figure. Okay. Second, movement can also be traced with statement of changes in equity. You can also check with SOC. For adjustment relating to dividend and tax, verify resolution is passed by shareholders for dividend. If the resolution is passed after the balance sheet date, it should be shown in next year. See it. Verify resolution by board of director. For dividend declared after balance sheet date. Okay. Then as per AS4 revised or Ind AS10, we should show in next year. Very simple. Trace the opening balance. For additions during the year end, see. See also with statement of changes in equity. Dividend and tax resolution is passed by board of directors and shareholders. Second, if dividend is declared after balance sheet date, then you have to show in next year. Over. Disclosures. Part 1 of Schedule 3 of Companies Act. What? Capital, reserve, redemption, reserve, security, premium, retained, earning. Over. Borrowings. How to check existence of borrowing. Whether borrowing exists or don't exist. Okay. How to check? Borrowing. Take confirmation, okay, from bank whether we have borrowed. If bank will confirm, it's perfect. See here. Review the board minutes for new lending agreements. You have to see the board minutes are there. Whenever you lend, board of directors resolution is there. See the board minutes for new lending agreement. During the year, see all the new agreements. Agree loan detail with loan agreement and see borrowings don't exceed the limit. Obtain confirmation from bank, of course. Take the details of lease, hire purchase if you have taken anything. Okay, see that agreement also. In case of debenture, see the terms of redemption, what are they. Obtain written representation from management. They have included all the borrowings. Completeness, same. Obtain a list of all the borrowings. First of all, compare with last year. Okay, whichever are new borrowings, okay, for that what we have to do, see the loan agreements for all new borrowings. Second, see board of director resolution is there. If they have discussed it in board of director minutes and resolution is there, it's perfect. Okay, obtain a schedule of all the loans. Consider evidence of additional debt through examination of BOD, significant contract, confirmation from bank, subsequent disclosure. Trace the closing balance. Review subsequent transaction to see loan after balance sheet date. Okay, after balance sheet date, whether you have taken any loan. Roll out independent confirmation take. Send the confirmation to all. Send reminder to those who are not replying for confirmation. Compare balance with, if you receive confirmation, compare balance with books of accounts. Over. I think this is last. Yes. Borrowings. How to do valuation? Very simple. Check the loan agreement. In loan agreement, this much is there, this much. If you are going to pay premium, okay, on redemption, then recalculate, see terms are proper. Determine accounting policy valuation of debt. Agree the loan balance with loan agreement. Recompute interest payable on redemption of debentures. For foreign currency loan, see, it is revalued as per AS11. Understood? Yes. I hope you understood a knack of this chapter. What is this chapter trying to tell? Everything is same, but it is not same. Okay. So it's just whatever we have done, it's a repeat telecast of that. Nothing new is there. Not even a single word. Okay. Hope you understood. Okay. With this, we complete our wonderful, amazing, mind-blowing journey of audit. Okay. I hope this lecture is very, very, very fruitful to you and work very, 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 very hard. Two people really want you to pass at any cost. Those are your mom and your dad. The day you pass, I think two people, for them it is life. Okay, they say after few years, love between mom and dad will reduce, but they are alive. Okay, they are kicking, they are working so hard because they want to see that child see. And when you become CA, they get a new lease of life. They feel, oh my God, everything zero now. For us, he is the main thing. Okay, we have achieved whatever we wanted to achieve. The day you become CA, your mom will become half CA. Okay, so work for them. That is what we want to tell. Okay, and nothing else. Okay, all the best. Thank you so much. See you all very soon. Bye bye.